anytime you're ready.
We have just completed a very successful series of announcement meetings. Now I'd like to visit with you about our strategies for the fourth quarter. As we move out of the 1989 model year and into the first quarter of the 1990 model year, it's important that we sit down together and review where we are and buy into our strategies for sales leadership and profitability. First, thanks again for your outstanding efforts in attaining truck sales leadership in August. This was truly a great team effort to sell those trucks. Now let's remember that winning is not a one-time thing, and we need to continue this effort and make it 2 in a row in September and then go from there. I'll be covering a number of topics today, so we'll send you a recall package of telecast highlights very quickly for you to share with your organization. The summer sell-down activity has created the sales momentum necessary to give you a strong closeout for the 89 model year and enable you to make an effective transition into the new model year. 1,017 dealers are at the $1,000 per new unit sold level, and we project the number of dealers to achieve this level by September the 18th to be in excess of 2,200. When we announced the summer sell down, our sales forecasters estimated that collectively you would sell 123% of your passenger car objective and 114% of your truck objective, or 118% combined. This over 100% of attainment would result in more profitable Chevrolet dealers. Based on current sales, you're selling at a pace to hit 121% passenger cars and 114% trucks, or 117 overall. Our charge will be to maximize sales the final 10 days of the summer sell down, and this will require another all-out team effort on your part to produce every possible sale from this activity. Let me congratulate the dealers who are already at the $1,000 level or will be in the next few days. We encourage you to increase your sales volume and profitability between now and September the 28th. And those of you who are not yet at the $1,000 level, we need your stepped up efforts to make the most of your remaining inventories. Trading between dealers is a must in order to get maximum results out of the remaining 89 model grounded stock. The summer sell down activity and your combined efforts are bringing us to a near record sell down. And it's important that you, as dealers, recognize the urgency in moving the 89 product prior to the announcement of our 90 models. Now you can anticipate that we will take whatever action is necessary to support the sales of the remaining 89 product in your inventory. And we will support you on 90 models with incentives. This incentive action obviously will only occur if we meet our 90 production schedules. Now if our plants close, then we'll have a new ball game, and I'll talk about our plans later on in this message. Please digress a moment with me to the February-March time frame. This was the time we said we would have better sell-down incentives than the traditional 5%, or quite frankly 2.5% model closeout allowance that we were accustomed to. Well, as you know, we did not let you down. We came with a better program than the 5%, with cash up front and an opportunity to receive more than 5%, as many of you are now experiencing. Let me say this. If we maintain our present production plans, we'll do whatever it takes to be competitive with the 89s and the 90s in inventory in October. Now, the purpose of this communication with you today is to bring you on board as to the launch strategies of our new products to be announced in the next several months, so we can jointly be in a position to plan our ordering and production requirements. Although this was covered in our announcement meetings, there still seems to be a great deal of confusion that I hope to clarify. First, our 1990 APV will have an estimated model year production of 80,000 units. Our distribution launch will be in 3 phases to assure the quality. The first phase, including 1,600 vehicles produced for company evaluation, the majority of which will be redistributed to dealers and not sent to the auction. During phase 2, we will distribute APVs to the top 10 markets. This will encompass production during early September. From there, we'll move immediately into Phase 3, which will be a national rollout with quantities equal to 1 per dealer. This production period starts in mid-September. The 1990 Storm will have an availability of approximately 90,000 vehicles. Now, we've started the first phase of our distribution launch with August and September production going to the states with the greatest market potential. Phase 2 will begin national distribution with preferencing on September the 28th for October production. Our launch of the SS 454 pickup will include a Phase 1 distribution to the state of California, followed by offering every dealer nationally a minimum of 1 vehicle. The remainder of our estimated production of 10,000 will be distributed to the top 10 ADIs nationally, as well as covering other areas such as motorsports, auto shows, and displays. The Caprice availability for the 1990 model year will be in line with market demand. Our strategy will provide vehicles in sufficient quantities during the slow acceleration period of the 91 Caprice. Arlington Assembly Plant will shut down April 1990 to prepare for their startup of the 1991 Caprice in August of 1990. Our Lakewood Assembly Plant will maintain 1990 Caprice production to fulfill demand, while the Willow Run Assembly Plant will start up the 1991 Caprice production in January of 1990 with a slow acceleration schedule. In Phase 2, the first 2 months' production of the 1991 Caprice will be offered to the top 10 full-size markets nationally. Then Phase 3 will begin in March of next year with national distribution of 1 per dealer with additional preference guide based on 1990 model year to date dealer sales. After sufficient inventories are reached, allocation will revert to the rate of sales through availability. And finally, the 1991 S Blazer will have an estimated production of 36,000 two-door models and 45,000 four-door models. Distribution of the 1991 two-door S Blazer will be based on 1990 model year sales of S Blazers. And national distribution will begin in mid-February to all dealers and will be based on 1989 and 1990 S Blazer sales. Now here's our sales and market outlook for the first quarter of the 90 model year. You'll see why we reviewed the previous production strategies with you. We anticipate car sales in the first quarter to be similar to year-ago levels overall with large swings by car line. Now we expect improved marketplace positions allowing Chevrolet to maintain its volume in a slightly softer market, improving market share by 1.3 penetration points. Geo will provide a major gain led by the new Storm. We anticipate the Cavalier sales volume will be under year-ago levels, as will the Camaro with lesser reductions in the Corsica and the Beretta. The Lumina will provide major gains in sales volume, while discontinuance of the Celebrity sedan will result in reduced volume. The Caprice also will have slightly reduced volume in concert with lower availability. Now, we anticipate truck sales in the first quarter to be similar to last year's pace, which was great. We expect our market share to improve approximately 1 point over the same quarter last year. We anticipate this growth in market share in a slightly declining market via our new products, the APV and the Tracker, along with better CK product mix. The Astro and the Tracker will provide some gains, and the new entry Lumina APV will provide major volume gains. The G-Vans also are expected to provide a boost in sales volume, while the CK will continue to be the major contributor. Now we must continue momentum on the S10 pickup and the S Blazer lines, which should set volume records for the 89 model year. This is a must strategy for leadership. Your carryover passenger car stocks will be well under previous years at 94,700 units. The prior model stock available on the Geo product is also well under that of previous years. The Cavalier, Corsica, and the Beretta carryover volumes are above last year, while the Camaro volume will be relatively low. The Celebrity carryover volumes, as expected, are shrinking, and Caprice volumes are minimal. The Corvette carryover volumes will match last year's. Your prior model truck stock will be much improved over last year's scarce levels and consistent with your record sales levels at 172,400 units. All other lines also add to the improved prior model availability, with the full-size pickups being a major contributor. With these truck stock levels, there shouldn't be any excuses for not outselling Ford. Current inventory is not a problem, and let's not allow it to become a problem because of lack of 90 orders. Chevrolet's fourth quarter production is planned to coincide with industry forecasts, maintaining Chevrolet as a dominant force in the industry. Estimated passenger car production compared to the first quarter of the 1989 model year will be down approximately 15,000 units. Lumina, as a new entry, will add approximately 72,000 vehicles to your availability, and Cavalier will be up slightly. Celebrity production, which will only be station wagons, will be reduced 51,000, followed by a 12,000 reduction in Beretta and a 15,000 reduction in regular models. Our total passenger car production, with the inclusion of Geo, will be up slightly for the same quarter of the prior year, assuming the order banks are adequate to support uninterrupted production. As you'll note from these figures, each Geo line will show an increase over the same model or the model drop from the prior year. With the combination of Chevrolet and Geo, you'll be in an excellent position to improve your market penetration and further reduce Ford's sales lead. The challenge will be to remain aggressive both in your ordering and merchandising of Chevrolet Geo products. Scheduled truck production will decline nearly 42,000 units from the same period in the previous model year. Again, these schedules are dependent upon consistent buildable order banks to support production. The Lumina APV will show an increase of approximately 14,000 vehicles, while production decreases will be greatest in the S10 pickup, followed by smaller decreases in the CK pickup, RV models, and the Astro vans. And we're confident that with these changes, you will retain the necessary availability to continue your truck sales leadership through the first quarter of the 1990 model year. Now that I've reviewed with you our 90 launch plans and production information for the fourth quarter, let me share some refinements we're making to the distribution system. In response to individual dealer requests and comments from our recent Tier 1 dealer meeting in Detroit, we will adjust tiered distribution. Effective September the 28th, Tier 1 distribution will include dealers with 0 to 99 retail sales for a 12-month period. Now, this is a change from previous guide of 0 to 300 sales. Tier 2 will encompass dealers with greater than 99 retail sales over a 12-month period. Under the new tier alignment, Tier 1 will include approximately 1,068 or 22% of the Chevrolet dealers, and Tier 2 will represent the remaining 3,668 dealers or 78% of all dealers. This change has been incorporated to more accurately reflect Tier 1 dealer product requirements. This also allows Tier 2 dealers with a growth opportunity to have better response from Chevrolet in individual vehicle lines. This allows more dealers the opportunity to penetrate each market segment in their area of responsibility without being penalized by total passenger or truck line. Also, prior to the end of September, we will improve our communications with you by increased utilization of the message field on the weekly retail order availability delivery report, commonly referred to as the RD42. This message field will be enhanced to include updates on changes in production, optional equipment availability, and critical production requirements, as well as service and warranty information. I encourage you to review this message field weekly to stay abreast and take advantage of changing conditions. To summarize, we're coming off of an excellent 1989 model year sell-down. The period ahead appears sound. Consumer sentiment and buying conditions remain at relatively healthy levels, The continued strength of the economy is reflected in various indicators, such as personal income and spending growth. Industry volume continues to outperform the analysts' expectations. Chevrolet dealers enter the first quarter of the 90 model year with manageable inventories. Our production schedules are in line with market forecasts and also provide the opportunity to take additional market share from our chief competitor, and that's Ford. Launch strategies are in place to bring out our new products with maximum exposure and customer acceptance. Our distribution is being refined to assist Chevrolet dealers in meeting the challenge of a very competitive market. You have our commitment that we will support the sales of both 89 and 90 products in your inventories if we do not have to cut schedules further. And that brings us to a very important point. We are within days of closing many of our assembly plants for lack of 1990 model orders. Now, I'm sure the lack of orders is being caused by the number of unique announcements. Also, with all the concentration on the summer sale-down activity, we've taken our emphasis off of 1990 order startup requirements. Therefore, I'm asking you to take a close business look at your requirements and order sufficient quantities where necessary. Your area manager sales and account manager will be visiting with you by phone and in person to review specific numbers. Remember, we have during the model year consistently provided whatever support you needed to move the product on the ground. Today and tomorrow will be no different. Your support in this ordering effort is very important to your profitability and our commitment to continue to bring you sufficient new product. Thank you, and as always, good selling.